Hello, this is Mike Swanson. I'm speaking with a very special guest today. I'm speaking with David Skarica, who runs the website addictedtoprofits.net. How you doing, Dave?
Pretty good, Mike. How you doing?
Oh, great. Well, this is a very interesting day. We're doing this right after the close, January the 17th, and the Dow has exploded again. Boeing was up 4%. Big moves, records being made, but this morning, Bitcoin collapsed, fell below 10,000. We're above 10,000 at the moment, but there is carnage in the Bitcoin world. Do you think it's going to recover? Do you think this is a buying opportunity for Bitcoin people and that Bitcoin players can finally get a run back up to 20,000, up to perhaps even 1 million, as some are predicting?
Well, it's very difficult to know because, both of you and I have been trading for over 20 years, and we both started during the dot-com bubble, which was essentially about 20 years ago. And what would happen then in 1998, 99, when it took off, was you would have these big 40, 50, 60% corrections, the drawdowns, and then everyone would say the bubbles burst, and then the market would move to new highs, and it kept doing that until March of 2000, right? So let's say, just for argument's sake, Bitcoin did bottom today around 10,000, and now it takes off, and by the spring or summer it goes to 30 or 40,000 or something, right? Then people are going to think that, then you're going to get that mentality creep in that, you know what, these big washouts are really just, buying opportunities, and they're going to want to dive into the market when it's, whenever these things happen. So I really don't know. The chart has gone totally parabolic, and all parabolic curves usually collapse. But with Bitcoin being so unique in that, there's no valuation metric, there's no price to earnings, there's no way of really valuing this thing. I could see it just having this 50% drawdown now and then going to new highs. But on the other hand, it could just have some kind of bounce here. It did bounce $1,000 off the low basically today, and then move lower again, right? So we're gonna have to see what happens. But definitely after this amount of technical damage done, even if you're a bull, it's gonna take a little while for this to kind of repair itself. And the big news was there was this. See, the problem I have with the whole thing is there's been so many shady things going on in Bitcoin since the start of it. About 4 years ago, actually about 3 years ago in 2014, early 2014, 4 years ago, early 2014, when there was this first big correction in it, there was something called Mt. Gox, which is one of the biggest exchanges, and essentially it just went bankrupt, and the coins got stolen. They said they got hacked. No one knows if the guys who founded it just stole the coins. And today there was something called BitConnect that went down, essentially a Ponzi scheme, where they were allowing people to borrow and then speculate on Bitcoins, and I guess they were just kind of taking the Bitcoins themselves and selling it into the market. And as long as Bitcoin went up, they could continue to have the funds to borrow, but as soon as you had this correction, they blew themselves up. So what's interesting about Bitcoin, I find, is you've had all these exchanges and a bunch of these frauds happen. There was another coin that's something like doing for streaming of porn, and this guy just essentially has stolen the investors' money as well. So it's kind of interesting to have all these scams and frauds, but it's still these coins and cryptocurrencies have generated all this interest.
Well, one thing about it is back in December, there was news that came out that the creator, I think it was of Litecoin, sold all of it and is hundreds of millions, maybe even $1 billion. He just liquidated all Litecoins that he owned, and he created. And the Bitcoin community came out, I saw, and leaders of it, if you want to call them that, said, oh, he's doing that for the good of the community because he doesn't want conflicts of interest, which seems kind of silly, a silly rationalization or excuse. But the thing is, there are, or were, 100 people owning 50% of all Bitcoin. And I wonder if the futures market, once the futures started trade, if that only just became a mechanism for these people to just lock in the valuations that they got, the prices that they got, hedge and be protected no matter what happens. And now it doesn't seem like an ETF is going to happen. The SEC has rejected several Bitcoin ETFs, and here we are left with probably the so-called whales, the real controllers of Bitcoin prices, probably all hedged and just not even caring what happens, and the Litecoin guy's out, and we just got small fries trading it now. And now they got really hit and suffering badly. Most people that that are in Bitcoin now, they bought after September, or many people bought in November, and if it falls below the lows of today, they're all going to have losses. This could be tough. I think a lot of people that bought during those time frames, they're still up or a little bit, and they're probably willing to hold. But if they end up losing, then I think it's just over with, and there'll be a drag on the market. So it's got to hold, the lows of today, really. And if it doesn't, I really think it's over.
Yeah. It's like, look, I get a little bit, because having turned bearish on the markets a little prematurely, and having seen people who say that just think cryptocurrencies are a bubble, always be kind of crying wolf and calling for the bursting of that bubble, I'm a little more apprehensive just to do so. And part of it too is like, look, I don't have much skin in the game. Both you and I bought one little blockchain deal. They were doing a private placement, and we put a very small amount of money into it. So all I have is this one very, very small investment, and I really don't have much interest in trading these coins. And the last few days is why. Like, I know a lot of them went up 10,000% or something, but when I see the volatility, I just don't want to deal with that. That's ridiculous. This is. We saw volatility in the .com bubble with .com stocks, but this is insane. Like, these things going up tenfold and then falling 50% in a month, and it just being like a normal trading pattern. It's just, it's ridiculous. So, like, I don't really have much interest in trading it as well. So, yeah, but I would definitely think that I think 9,200, actually, I just looked at it, was an intraday low today. And I would think that if you go through that, it's probably over at this point. It would probably be over. So we will just have to see if that holds or not, or if we base out for a few months and then see another leg higher. Like, obviously, if you're a believer, people are going to be buying, thinking that, Bitcoin's down 50%. Some of the other ones like Ripple are down like 70% from the highs, But if you're not really a believer, you're going to think the bubble has basically burst, right? So it could basically go either way at this point. I would just think that something that is in really a healthy, tight market, in a healthy, trading mechanism wouldn't trade like this. And like the interesting thing that you said about the Bitcoin being owned 40% by like 10 people is, a lot of the people who, are proponents of a lot of cryptocurrencies will say that, this is a free market, you don't have bankers, you don't have central banks, you can't print it, there's a limited, like almost like this is more of a pure type of trading, laissez-faire capitalism. But I would just think that a lot of these coins are actually very manipulated and controlled by a few holders and owners, and that's why I'd be very wary. Like basically this BitConnect site that blew up, that was also a trading coin, right? And when the site blew up, it went down 90% today, and it was $400 a few weeks ago, and now this thing is $18. And these guys are obviously using Bitcoin. It still has a market cap, by the way, of $145 million. But I would think that is a sign that those kind of things can happen. Like I said, like these guys are essentially doing a Ponzi scheme with this coin and trading service.
Yeah, it's been wild to watch. It's what I took away from this is it's very difficult to. I'm not trading Bitcoin, but it's very difficult, I think, to even do so because I don't know anyone who called the top in December in Bitcoin or said at least it was going to have a nasty correction. Not a single person do I know that has done that, and here we are, basically a month, and it's been pretty, a tough situation for Bitcoin people. And it just, to me, it should be a lesson, not necessarily that Bitcoin's terrible and bad or whatever. If we're not in it, who cares? But I think it's an important lesson for money management. So many people that got into Bitcoin and crypto trading, they never traded before. They're younger people. It's their first market they've ever experienced. They put and they got small accounts or big accounts, whatever, but it's all they're doing. And if you don't diversify and you're only in one market, it can just turn down on you suddenly and really, crush you. A lot of people in this Bitcoin, they're going to be wiped out from trading forever, or some people probably are as we're speaking. And here we look at the stock market, and you just sent me the Investors Intelligence Survey, which shows that the number of people bullish is 66%, and I think that might actually be an all-time record for Investors Intelligence.
Yeah. Well, actually, we'll segue into the stock market, but the last thing I like to end on Bitcoin, and the thing I find it so interesting is that, and we've talked about this a lot just when we talk privately, I really believe that if you watch or read anything on the bubble of 1929, that Bitcoin and these cryptocurrencies today are like stocks were back then. I talked about maybe potentially being some manipulation going on in the coins. Back then, you had kind of like these stock pools and that sort of thing. And these Wall Street guys would basically manipulate a stock pool and pump a stock like RCA or something of that sort, right? So that's number one, okay? And then number two, like, because it's so volatile, it reminds me of the leverage people had in stocks. Like, for those who aren't aware, you could buy a stock on a 90% margin back in the 20s. So, okay, stocks didn't go up 10,000% like these coins did, but what happened essentially is if you had $1,000 controlling 10,000 and all of a sudden the stock doubled, well, then all of a sudden you had 11,000 in equity, right? Your 1,000 went to 20, and then you got the 9,000 in margin. So then you could take that 11,000 in equity and control $110,000 in stock, and then you could, that doubled. You take that, 20,000 in equity and control 200,000. So basically, what would happen is people would essentially just get like a triple or quadruple, and all of a sudden, because of the leverage, can increase their portfolio size, even though most of it was just borrowing on margin by 20 times, And I think that's what this is here, where people think they can make 20 or 30 times in a quick manner. It's funny because I watched some of these podcasts on it for fun, guys who do crypto trading. And one guy was saying, well, the problem you've been buying Bitcoin down here, at 1,000, it has to go to 2,000 to double. But if you're buying these smaller coins, say something that was a 50-cent coin that's gone down to 20 cents in this correction, or something that was $1, you only need it to go up 20 cents to double. So that's kind of the mentality, is to get rich quick. And now to segue to the stock market. So, of course, the stock market hasn't been affected at all by this. We saw the Dow up over 300 points today. One of the best months or days we've had in months. I'd have to check it. I think it might have been the best since maybe post the election. Like, we haven't seen a rally like this in a one day, even though the market's done well. We haven't seen like a 300-400 point day in the Dow for quite some time. And what's interesting about that is, and you talked about Investors Intelligence, the last time Investors Intelligence was near this high was 1987, and it was in January. In January 1987, the market was up 13% that month. And that was kind of like, the kickoff to what was a great year until that fall. So I think we could be kind of seeing the same thing. The internals are pretty strong. We have a lot of new highs. We have a very strong advanced decline line. A lot of stocks trading over their moving averages, be it a 20, 50, or 200-day moving average. So I think that the internals are pretty strong. And usually when the internals are strong, it doesn't precede some kind of big drawdown in the stock market. You can still get a correction, don't get me wrong. But probably if you're going to see a topping formation, you're going to need to see that correction, a rally, and on that rally, the internals begin to kind of roll over. So, but I do find this unique kind of similarity here where we got this big blast off in January of 2018, just like January of 87, with high amounts of sentiment, and at the latter end of kind of a bull market. So I do think, and in 1986 they passed tax reform, They just passed tax reform, right, last month. So there are a lot of these interesting similarities here. And again, I wouldn't think it's going to crash overnight, but I would just think that the similarities that you have this big January, maybe you get some kind of correction in the first or second quarter, and followed by a blow off in the summer. If that happens, I'd be more convinced something bad might happen in the fall.
Well, it's certainly going to be an interesting year. It's no doubt about that. In some ways, I think last year was kind of boring for people. I mean, even though the market went up, there was no volatility, there were no pullbacks, and Bitcoin provided excitement for a lot of people, and a lot of people got into trading for the very first time. But, you know, you see what Bitcoin has done today. But we got the gold, we got the dollar. That, you know, I spoke with Ike Iosif a couple days ago, and he thinks that they're poised for big moves to start within the next couple months. What are your thoughts on gold right now?
I think it looks good. Actually, one interesting point about 1987 too was kind of like now in that rally, there was a correction in 1984. And, the market bottom in 1982. And really for most of that time period, from 84 to 87, gold actually did not participate in the rally with the stock market. It actually really lagged badly in 84, 85, and then into 86. Then finally there was a move off the lows in 86, and then in 87 it really took off. Now, we did see gold down a little bit today, but what I find interesting is that you're seeing gold strength along with this kind of stock market strength. So I'm kind of, again, getting that feeling that kind of like 1987, that we could see gold and the market rally together into that summer kind of time period. The key level in gold is 1350. If we can break through 1350, I think we've got this almost like 4-year bottoming pattern going back to 2013, actually almost 5-year bottoming pattern, and gold might really be able to kind of move higher. But I do find it interesting that they could be, kind of like linked together and can move together into the summer. And I think it actually looks quite good. And, obviously the weakness in the dollar has helped. But the thing about the dollar, what's going to be interesting is that there's something very key geopolitically that's going to happen in about 45 days' time that no one is talking about at all. And Italy is going to have their election. And all of the polls have shown in Italy that 3 of the 4 leading polling parties are anti-euro. So I really think the euro actually might sell off when it's obvious that Italy's going to go the opposite direction as, say, Germany or France went in their last election. Italy's much more important than, say, the UK referendum because Italy is actually physically in the euro, part of the euro, uses the euro currency, most indebted country outside of Greece in the euro. Right, the third largest economy behind France and Germany. So, but what I'm saying for gold would be interesting is that you could see the euro kind of fall, but I think you could see this influx into gold because of the political uncertainty kind of starting to ramp up a bit again.
Wow, that's we're going to keep an eye on that for sure. But it's interesting to say the least. But one thing about the European markets though is that they actually went up more than the U.S. stock market. So do you think that would continue, or do you think the Italian election will spook people in Europe?
That's always difficult to know because the one reason the European markets have done better is you're talking about the ETFs based in U.S. dollars. So you look at the EWI, which is the Italian ETF. This thing is up, 50+% from its lows in 2016. And part of the reason it's up, quite frankly, is because the euro has also rallied went to roughly par. I think it went to 104 or something at the bottom. Now it's over 120. So you've got this like 15%, 20% rally in the currency on top of the market going higher. So what could happen, and you've seen this in the UK, by the way, that when the pound would weaken, the British market would actually do well. So in Europe, maybe domestically, even though you got this political uncertainty, especially in a country like Germany, which is a big exporter, maybe those markets don't really go down because the euro is weakening. But obviously, in U.S. dollar terms, you're not going to do very, very well in that. And by the way, there's one more thing I'd like to talk about Italy, because we're talking about all these, we were talking about sentiment earlier, and another valuation metric that is completely overvalued right now, I think it might be getting above the 2000 highs, is the stock market capitalization to GDP, right? And so the size of the stock market compared to the size of the economy. And in the U.S., it's like 140 something percent. In Italy, it actually went down to 15% at the lows in 2016. And the market has rallied, like I said, over 50% in U.S. dollar terms since that. Then, so even now, it's still not expensive in that metric. But that's just an interesting way to look at that indicator. That you look at an indicator like that right now would tell you in the U.S., stay away from stocks, because no matter how good the news seems, it's just so overvalued compared to the size of the real economy. And in Italy, like a year or two ago, it was like, doesn't matter how bad the news is, should buy Italian stocks, which have rallied over 50% since, because they're just so cheap compared to the size of the economy, right? So, but anyhow, so like I said, I don't know, the stocks can rally, because if the euro falls, it'll be good for exporters. And places like Italy and Germany have, like Fiat, Chrysler is based in Italy, all the car companies and manufacturers based in Germany. So a weaker euro could actually help them a bit. So it's hard to know if that initially would even cause a sell-off in European stocks.
Yeah, actually, you mentioned, let me see, the stock. Fiat's really done great this month. It's the symbol is FCAU, and it's already up over 10%. It's been a good trade for people for sure. Well, thanks for talking to me and everyone else. Unless I don't want to cut you off if you got something else to say, but I don't want to keep all your time either.
Yeah, I'd just like to actually quickly note Fiat. That's a very interesting stock, because back a few years ago in my newsletter, we actually had a buy on that. We've gotten out of it since, but what was interesting about that stock is in like 2015, Fiat was still lower than it was in like 2010. And it had a very cheap multiple, still only trades at 9 times earnings. And it took over Chrysler, obviously. And at that time, it was just a pink sheet listing. They've since have gone back over to the NYSE. And that was just an example of a stock that was really cheap, had a good valuation. It was much cheaper than the North American automakers. And sometimes you have to ignore your kind of macro biases. So back in 2016, 2015, for example, I was someone who was bearish in the stock market, but I had no problem talking about Fiat at that time because it was a cheap stock, right? Now, like I said, we got out of it a little early, but that's just an example of something is cheap enough. You have to kind of ignore those biases and then maybe buy it. Or on the reverse effect, we're seeing a lot of this, rally based on people's political beliefs. And you kind of got to ignore that when things are expensive.
Oh, definitely. And that's the key for everybody. You got to be as objective as we possibly can be in all of these markets. Well, thanks for talking to me and everyone else, and we'll talk again soon.
Well, thanks for having me.